Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 8th of November. All right, let's just have a look at the key theme here coming out of the North American session. The dollar bounces after sharp sell-off. Weak data hurts the euro. Now, this is where the news services can get a little bit liberal with the way they sort of comment on things, right? The dollar's bounced, but overall it's lower, right? They're sort of really sort of nitpicking. If anything, to me, this could be like a dead duck bounce where it sort of bounces back, but it's not like it's bouncing to come back, right? So, but we'll have to wait and see. This is quite typical of a week where we don't have connecting numbers coming out sort of each day, whether they're European, US, UK, etc. Right? We've got little bits and pieces, and out of the US, we've got. If I just come back to the news, we've got sporadic components from various Fed officials. We've got Jerome Powell speaking today, which will be more important, but there's no sort of thing, nothing for traders to hang their hat on and sort of jump in. So what we're seeing is a very typical move where the markets are sort of gyrating around based on sort of risk on, risk off profiles. At the moment, we had a risk off profile, Euro, Sterling, Aussie, Kiwi down, dollar up, and this is contradicting the US Treasury bonds. The yields are lower. So you think there'd be a lower dollar, but it's not in play, right? So the connection between the various markets, especially the bond markets, has decoupled somewhat, and you need to know that. And these are somewhat normal markets. At times when there's a focal point, of course, the bonds can be the major directional force on the dollar and equity markets, but that can break down very quickly like it does. And if you don't recognize it, you can walk into a trade here and get it terribly wrong, because right here at the moment, if we were really focusing on this, yields down, the dollar would be sort of cruising to the downside, right? And that's not what we're seeing. So you need to keep your wits about you, all right? Now, just coming back to the dollar, well, actually, let's just come into what we're looking for today, right? Where's the major focus? So coming into, this is where the week sort of hots up a little bit. And when I say that, it's quite liberal because we do have the Fed Chairman Powell speaking. So anytime he speaks, it's a high impacting or potential high impacting event. But is he really going to come out with anything amazing? Well, I'd have to wait and see, but I wouldn't think so, right? If anything, there's probably a better chance of getting something out of the Bank of Canada summary of deliberations. We've got a bunch of Fed officials talking here. If anything, right, and connect the dots. Don't forget the news wires are sort of talking about weak European data, right? Industrial production numbers out of Germany. And this, I can tell you, this is significant, right? Minus 1.4 versus minus 0.1 expected. Now, Germany is the anchor, right? The foundation for the Eurozone. So if their numbers start dropping, I tell you what, you want to pay attention, because that could be, that's a major concern for traders like us. We start frothing, right? Because if we see one of the biggest currencies starting to like roll over as far as economic conditions go, and that's Germany, well, I'm starting to think this is great. This is going to set us up for a great trading opportunity, right? So when I'm looking at that and we come to the next day, we've got more data coming out. Now it starts to make a little bit more sense. Eurozone retail sales. Now the inflation rate, the final number, it's usually close to the mark. But I'll tell you what, if this comes in considerably weaker than the consensus, then the euro is going to be a sell, right? Euro or euro crosses, you want to be keeping a close eye on that. Obviously, Jerome Powell as well. And that's how you connect the dots, right? So these are sort of the key events that we need to be focusing on. So when you are in that, if you're trading in the European session, keep an eye on the equity markets, right? And see if you're getting a natural flow of risk on, risk off through that, right? The US equity futures will probably be the main directional force there. Now, coming back to the charts just quickly. All right, so just having a look across the major instruments, right? We've had the clean out to the top side, right? This like the dollar, the strong dollar after non-farm payrolls. Okay, we've seen it, the dollar lower. It's come back. Now we're sort of in limbo, right? This is like the clean out, and this is where the market has found fair value for a lot of these instruments. Dollar yen has not given up the ghost yet. Dollar Swiss broke down, but I tell you what, it's sitting right here on resistance. Dollar Swiss is coming in to be one of the better technical trades at the moment, right? And it's hard for me to say because I don't usually get involved in Swiss too much, but it is looking very appealing. Now, oil is starting to really capitulate, right? So you are seeing dollar CAD move to the top side following that move in oil. And if I actually come across here to the global markets page, right, here we go. Then you'll see like oil finally, a lot of central banks will be happy with this because oil is a major part of the inflation picture. And if oil drops dramatically, I tell you what, the central banks, they got all these high interest rates, the inflation will start to be scaled or forecast much lower across the board. Equity markets, well, I'll tell you what, they don't think interest rates are going up anytime soon. As I said, even oil falling will have a direct sort of impact on a lower inflation numbers. That could be the catalyst for people to start buying equities, right? Because that means, okay, if inflation's lower, the Fed's done, lower interest rates sooner than later, equities go up. And that's what I'm sort of seeing at the moment on those. Well, that's what the indication is from these moves. All right. So just keep an eye on it. What you want to do is keep an eye on the key instruments that are in the frame, right? As I said, Euro data is up and running at the moment. We don't really have anything where it is right at the moment, but where these instruments are, right, they are susceptible to a move either up or down, depending on how the data comes out, right? At the moment, we've had a flush out of all the stale short euro positions or long dollar positions. Now it's sort of sitting here on all pairs. We had a key event like Jerome Powell come out and said something dramatic, then we would see a significant move and it would be pure across all the instruments because they've all been flushed out, right? So that's the good part. Just make sure you focus on the various financial markets so you can keep an eye on what's going on, whether there is a risk profile in the market, risk sentiment or not. The bonds, well, they have decoupled. Still watch them in case it comes back online, but you're looking at like a risk off profile, right? Aussie, Kiwi getting belted. All right. Okay, that's it for me for the moment. As I said, this is one of those funny weeks that you can't really, you can't hang your teeth on it or hang your hat. Well, I was going to say get your teeth stuck into it, but what we are looking for is the trail, and then start to look forward to Thursday, and that's where you can start to plan out what's going on there. I'll come into that tomorrow, but Chinese inflation numbers very important for Aussie and Kiwi in particular. And we'll see how the rest of it plays out. All right, guys, all the best. Cheerio.